Hey everyone, Steven here from the Trading Channel. I hope you're doing well. In today's video, we're going to be going through a preview of a course that I'm going to be teaching on my website containing a very simple and non-subjective moving average strategy. So because this is a preview, it will only be on my YouTube page for the next 30 days. So if you are not subscribed, guys, then go ahead and do that, because I do come out with these kind of videos from time to time that have very valuable content for free, just so I can give people an idea of what they will be getting if they do plan to purchase a course off my website, and also giving them an idea of my teaching style so they can decide whether or not I'm someone they could learn easily from. So subscribe to my channel so you're alerted when these videos come out, because they normally are only limited time videos, meaning I do take them off my YouTube channel after a certain amount of time. So without further ado, I'll go ahead and let the intro and disclaimer roll. And once we get back, I'll explain to you exactly how to set up these moving averages and how I use them in order to profit from trend continuation in the Forex markets. Alright guys, so here we are back on the charts looking at our moving average strategy. So the tools that you'll need in order to execute this strategy is just a 200 EMA and a 100 EMA. It's the only things you need on the chart. The rules: the 100 EMA must be above the 200 EMA for our first rule, and price action must be rejected off of the 100 EMA. That's the second rule. This is a very, very simple yet effective strategy, guys. So what we're really waiting on, our green line here is labeled as our 100 EMA, our red line is going to be our 200 EMA, and black is going to be price action. So what we're waiting on is the green to go above red. We get that here. Now what we would be doing is entering a position every time the market is rejected off of the 100 EMA, which is our green line. So that would be right here would be an entry, right here would be an entry, right here would be an entry, here and here. Those would all be entries according to the tools we have and the rules that we've set forth around those tools in order to make a strategy. And I know I didn't state specific entry reasons or stop or target placement, and that's because that is some information that will only be available on my course on my website once it comes out. But you will have enough information about this strategy in order to take it, and if you choose, test it for yourself, come up with different reasons for entries, stops, and targets that will best fit into your plan. And I think you can take full advantage of this from the knowledge you'll gain just after watching this video. So now that we know what we're looking for, let's go down to the charts and see how this strategy would have performed over the last month or so on the dollar Swiss. Alright guys, so here we are on the dollar Swiss, and we're starting here in March. We're going to see how the strategy performed from March to the present day. So I started here for a reason, because of this area of consolidation that you can see right in through here. You guys see this channel that's been created, the consolidation in this channel? This is not a very good time for any trend continuation strategy. So more important than learning a specific strategy is learning how to tell when a market's in trend and when a market's in consolidation, because without being able to do that, it's going to be very difficult to execute the strategies and to be profitable executing any strategy that is based around trend continuation. And I'm just going to circle my losing trades in red. Our green is above our red, as you can see right here. Green above red, waiting on the rejection. Here's the rejection, and that would have been a loss. Now our green's still above our red. Green is still above our red. Here's a win, rejection, and a win. Change that to green. And we'll just scroll through the charts and see how this strategy performed for the remainder of the month. Here we have a rejection. Depending on stop placement, could have been a win or a loss. With my stops, this would have been a win. Now we have this big waterfall down. Depending on target placement, this could have been a very good trade. Waiting on a rejection here. no rejection. Still below the line, closed below, rejected here. That's another win. Rejection, win. Rejection here. Rejection here. And as you can see, guys, this strategy works very, very well when the market is trending. Rejection that caused a loss. Rejection that caused a loss. Rejection here. Depending on your entry reason, this was a very big bullish candle here. So whether or not you would have got into this trade really depends on what your entry reason would be. Rejection here, and that would be a loss. Now we are below with our green line. As you can see right here, our green line, our 100 has crossed over our 200 EMA. Rejection and lost from here. We're back above. As you can see the cross here. Rejection. With my stops, this would have been a win. Depending on your stop placement, could have been a loss. And here we are, present day. So if we just remove our moving averages to make it easier to see our circles and zoom out the chart to see how many times we've won and lost since the month of March, you will see that we had 1, 2, this was the circle for our moving average, 3 losses. I know that's probably hard to see. 1, 2, 3, 4, 5, 6. So we had 6 losses. And 1, 2, 3, 4, 5, 6, 7, 8 wins. 6 losses and 8 wins, and let's assume you're risking $200 a trade, and you always give yourself at least a 1-to-1, which, as you saw during a trending market, you can get better than a 1-to-1, but just for today's example, let's assume that's what you did. 6 losses would be $1,200 lost, and 8 wins would be $1,600 won. So we have $1,600 minus $1,200, which obviously leaves you with a $400 profit since the month of March. And this may not sound like a lot, but as I said before, depending on your target placement, entry reasons, and obviously the size of your account, this can mean a pretty good bit of money. Alright, so now that I've looked through this chart with you and you can kind of tell how you would go about testing this strategy, I'm going to take you to a live day trade that we actually have on the dollar Swiss right now. It is down on a 15-minute chart. I also use this strategy to day trade with, and as you can see, we've already taken off first targets, moved our stop to break even, and we're doing pretty good on this position so far. I'll throw in my 2 lines, and as you can see here, we have the green above red. Green here, red here. Green is above the red line. We're waiting for the rejection. We get it here. Our entry was 98.16s. And as you can see, we've already hit first targets and are well on our way to our second targets, which are based on higher time frame. So I'll go ahead and go to the live trading example now and show you guys how I took advantage of this moving average strategy in order to day trade the dollar Swiss. Enjoy. Alright guys, so here we are on the dollar Swiss doing a little day trading using the moving average strategy that we've discussed. And as you can see, we're getting up about halfway to targets now and just waiting to see if this market can rally and continue in this upward trend that we have been in for the past few days. Alright guys, so here we are on the dollar Swiss doing a little day trading using the moving average strategy that we've been discussing today. And what we have here is a extended uptrend here, followed by a pullback and a rejection off of our 100 EMA. So now we are expecting the market to continue in its upward trend before coming down and pressing up against our stop loss here. So hopefully we will continue up and hit our targets here, back up close to previous structure. And until then, I'll pause the video and I'll let you know how this trade plays out. Alright guys, so here we are back on the dollar Swiss chart, and as you can see, we came down earlier and got very close to being stopped out here on this candle wick before shooting up and obviously hitting target 1s around this area here. And I've marked out a specific level of structure on a higher time frame. I chose the 4-hour chart to look for a level of structure in order to place my second targets up under, and that is where they lie, somewhere around the 98.88 area. So that's what we'll be looking for on into the rest of the day. For now, we'll move the stops up to break even. And this was a successful trade using the EMA strategy that we've been discussing today. Hope you guys enjoyed it. Alright guys, so I hope you enjoyed that video. I hope you found it to be really educational. Make sure to click that like button for me. Make sure to comment under the video if you did like it and let me know. And also, if you're new, make sure to subscribe so that you're alerted when I do come out with other videos similar to this one that have very valuable content for absolutely free. Now, something that I want to discuss before we go is back down here on the dollar Swiss chart. Now, there is something that I want to discuss before I let you guys go, and that is that when I was first starting out trading, I used to think that these guys that could pinpoint when the markets were going to explode up or down were magicians. I used to think that they were somehow psychic, that they knew what the market was going to do, or that they were just really, really lucky, and that's how they traded. But today I want to show you guys that it is absolutely nothing to do with magic, nothing to do with anyone being psychic, and I don't literally mean that I thought someone was magic or that they were psychic, but I hope you understand what I'm saying. There is no one that knows what's going to happen on the far right edge of your chart. No one knows. Not for certain. No one is 100% certain that they know what this chart's going to do. But at the same time, the trade you saw us perform today was not luck. We didn't just get lucky that we were involved in a very large move in the market. What we did today was a perfect example of preparation meeting opportunity. The preparation is the back testing that we've done in order to give ourselves confidence that every time our green 100 EMA is above our 200 EMA and price action is rejected off of our green 100 EMA, I know for a fact, because of testing historical data, that I have a pretty good chance of winning this trade. I know that more often than not, I'm going to win this trade because of the testing I've done. So I know I'll win more often than I won't. Now all I have to do is set myself up with greater than a 1-to-1 risk reward to be successful. That's our preparation. The opportunity comes when the market gives us a chance to execute this trade. And when we have preparation meeting opportunity, more often than not, success is inevitable. So remember that, guys. If you want to be involved in big moves like this one, if you want to be a successful trader, it is going to have nothing to do with luck. And it will have nothing to do with knowing what price is going to do next, because no one does. It will be preparation meeting opportunity. It will be you defining an edge in the market. You knowing that when you place a certain trade using a certain rule for entry, using rules that you've created in a strategy, knowing that if you consistently do that, you win more than you lose. That's what will create success. That's what's going to create the opportunities. So I'll leave you with that. I hope you have a great rest of your trading day. Don't forget to like this video, and I'll see you guys next time.